So you've heard about how funding rate arbitrage is potentially very easy money. You see people posting on X about it, how much money they made on their funding rate arbitrage trade, and you want to try your hand at it. Well, there are some pitfalls that you got to be super careful that you avoid when doing these funding rate arbitrage trades. And I want to cover one of those pitfalls here today so you don't get stuck losing money on a trade that seems like it should be a guaranteed winner. So, as you may or may not have experienced before, there are no guarantees in trading. Even a trade such as funding rate arbitrage might seem like a sure winner, but there are a few gotchas that you gotta keep in mind when you're putting these trades on. And people post on X how much money they made on a particular funding rate arbitrage trade, but I see very few people ever posting on X consistent wins in their funding rate arbitrage trade. So yeah, sure, you might have made a 500% annualized return on one trade, but can you do that consistently over time? So with some of these tips, if you want to get into funding rate arbitrage, hopefully this is going to help you here. And this is some lessons that I have learned personally trading myself, and I'll share them here with you. So first of all, what is funding rate arbitrage? It's when you take two contracts on two different exchanges, you buy one on the exchange where the funding rate is lower, and you sell the contract on the exchange where the funding rate is higher. You're in theory indifferent to the price because you'll lose money on one contract as the price goes up, say, and you'll make money on the other contract. And all you care about is collecting the difference between the funding rates on those two exchanges. So on the one I want to cover, the issue I want to cover today has to do with actually just placing the trade itself and getting your orders executed. And I've got a grid here of about 9 different assets, and these are spreads between lighter and Aster exchanges. And what I'm showing here is the bid and ask spread, and then the funding rate on each exchange, and then what the funding rate difference is. So if we pick one here, and let me zoom in a bit on one of these, what has a pretty high funding rate difference here. Okay, so Pippin, negative 125 on lighter, negative 10 on Aster. So that's a difference of about 110, 115% annualized. Now, here is where you got to be careful. You got to think about these trades in terms of basis points, right? Because the spread is going to be the spread between the bid and ask is priced in basis points, basically. And your funding rate, when it comes down to it, is priced in basis points per hour. If you think of it in basis points per hour, you're going to be way, way more careful about executing these trades. If you just take a look at this juicy 115% difference, you think, oh, okay, I'll do 2x leverage. That's a 230 annualized percent return. I'm going to be just minting money. And it's not gonna be that easy. So first of all, if you look at the bid-ask spread here on lighter, it's 18 basis points. On Aster, it's 6 basis points. Now, if you take the funding rate and get it down in terms of basis points per hour, how many basis points per hour are you going to make? It comes out to 1.3, which is pretty good for a delta neutral strategy where you're not concerned about the price move. The basis points 1.3 per hour is a pretty decent return. Now here is where you're going to get killed though, because of the way that the pricing is between these two assets on these exchanges. It's actually, because basically what you're going to want to do is you're going to want to buy the contract on lighter, and you're going to want to short it on Aster. Now, the problem is that the contract is actually more expensive on lighter. So you're actually going to buy a contract that's more expensive and sell the cheaper one. This is actually the opposite of typically what you'd want to do, right? You want to buy the cheap one and sell the more expensive one. Now, because of that, you can see that what you're going to be paying on that spread between the more expensive one, buying the expensive one, and selling the cheap one is 30 basis points. And if you happen to place your order at the wrong time, you just saw it flicker up to like 50 basis points there. So immediately you're going to be down 30 basis points as soon as you execute that trade. Now, because of that, you're earning 1.2%, 1.2 basis points per hour. So it's going to take you roughly 30 hours just to break even from the shitty execution that you're getting because of the spread difference, the price differences between these two exchanges, right? So people don't realize it unless they're looking super closely at not only the funding rate difference, but also the prices between those two exchanges. So you're not going to want to take this trade. It's going to take you forever just to make your money back on the funding rate. If the funding rate even holds up for that long, like sometimes these funding rates revert very quickly. So you want to avoid this trade right here. You don't want to get into this trade because you're going to be down 30 basis points right as soon as you place it. And then you got to wait 30 hours just to break even on it. So really what you want to do is you want to find funding rates on pairs where you're not paying a fee just to get into the trade. Now here's another one. This one's even juicier. This is four basis points per hour, but you're paying 3 basis points to get into this trade. So it's not as bad as the other one. And here's the other thing too. If you're paying commissions on top of this, right? That's another headwind to this whole strategy. So I know a lot of brokers now, if you're placing trades through the UI, they don't charge a commission. Some of them still do, but let's say you're making these trades through, say, the API, and you're paying 4 basis points per trade. That's like another 8 basis points round trip. So if you're collecting 4 basis points per hour, that's another 2 hours just to break even on your funding rate trade. So in terms of funding rate here, let's see. Okay, so XAG, this is a decent one, right? So it's about you got 49% annualized difference between those funding rates. So here, that's about half a basis point per hour. And you can see if the spread goes positive, that means you're getting paid to take that trade. You're buying the cheaper, selling the more expensive one. So actually, this is a good one here because you're making, be up to that just went up to 5 basis points there, making up to 5 basis points just on the trade itself. So not only are you making money on the funding rate, but you're also making money because the spread is working in your favor. On this particular trade. Now the tricky thing too is you can see the spread is just flickers like crazy, right? So it all comes down to, how you get your trade executed and just kind of luck. If you're placing these trades manually, it's just going to be luck whether or not you're going to get filled at a favorable rate or not. But anyway, that is something that you got to kind of keep your eye on, or you really got to keep your eye on as you're looking for funding rate opportunities. Don't just look at the difference between those funding rates, but also look at the difference in the prices between those two exchanges. And you don't want to be, paying 30 basis points like you are down here for this particular pair. So I hope that's helpful. I'll have some more tips for funding rate arbitrage. There's a number of different things you got to consider. It's not just a free lunch trade. It's just like any other trading strategy. There's risks involved with it. They're just not the same types of risks that you would see when you're making a directional bet on the market. So anyway, I'd love to hear about your experiences with funding rate arbitrage, or if you have some other questions or want me to cover anything else, drop a comment below. And hope you guys are having an awesome week. I will see you soon. Bye.